Morning traders, welcome to Monday. It's a new week. It should be a much quieter week than last week, but we do have US CPI, which is going to be important on Wednesday night our time in helping us figure out exactly when the Fed's going to lift off, because it's clear after Friday night's data, where industrial production doubled estimates with a 0.6% print, that the current pace of growth in the US is completely incompatible with 0% interest rates. Of course, inflation is a key part of the Fed's dual mandate, and they will be keeping an eye on that. But it's reasonably clear that they need to tighten sometime soon. Whether it's September or December is still difficult to know, given all the tumult and turmoil that resulted from last week's China move. It's reasonable to assume that they might delay, but the economic data in the US certainly supports a move now. So we'll have to see. We've got two Fed speakers later this week talking. We've got John Williams, San Francisco president, and who's widely assumed to be have a close relationship with Janet Yellen, given that he took her job when she moved over to the FOMC. He's speaking in Asia, as is Nayarana Kokachera. They'll both be talking, no doubt, about what's going on in emerging markets, what China's just done, and possibly some hints on what the Fed's going to do. Anyway, back to Friday. And stocks in the US rallied on Friday night, but in Europe they remained under pressure. That's pretty much a microcosm of what we saw last week. At some point on Wednesday night, somebody decided in the US that it was time to buy stocks, and they just kept buying. Of course, they didn't rally through the roof, but it was a much better performance over the back end of the week in the US, which allowed the markets to actually finish in the black for the week. Europe, it was a very different situation. They were under a little bit of pressure again on Friday night, and most of the big indices closed down between 2 and 5% on the week, which is interesting. From a technical point of view, the DAX bounced off the 200-day moving average a couple of times, but overall, technically, European bourses are looking a little bit weak. Trade data tonight out of Europe is going to be really important, I think. We'll be looking for, or I will be looking for, what's going on with Chinese trade, just to see, the pace of the slowdown. Germany, in particular, is exposed to what's going on in China, so I'll be watching that one closely. The move in the US market Friday night was good news mildly good news, I should really say. Good news for the ASX 200 with the SPY futures contract for September up 9 points to 5,300. But Friday we saw another 0.6% fall, and the market closed the week below the big trend line that goes back to February 2012. That break sets up a run lower towards 51.50, and some of the smart money I talked to, hedge fund types, are targeting 4,800. We'll have to see. The CBA starts trading again today, and we'll see how much downward pressure, if at all, that places on the ASX. And of course, the commodity markets continuing to crash. The CRB's made another new post 2009 GFC low on Friday night. So it's looking like there's still going to be plenty of pressure on the ASX. On Forex markets, it was quiet for a change. The US dollar was a tiny bit stronger. The euro's just clinging to 111. Sterling looks okay though in the 156.5 region. The Aussie keeps getting sold when it gets to 74 low, 74.20, 74 10, that kind of region. But it was still a pretty good performance to bounce off the 72.16 low that we saw last week. We'll have to see how things go. If commodity prices continue to fall, then the Aussie is going to continue to remain under pressure. I don't think it's going to crash anytime soon. There is a lot baked into the cake. But to the extent that new falls in commodity prices are fresh news, that just keeps the downward pressure. Bond markets reappraised in many ways, like the US stock markets reappraised what was going to happen in China, and the fact that the Chinese RMB devaluation and depreciation we saw last week doesn't look like it's a trend towards a quick 10% depreciation, gave bond traders a little bit of pause, and so they sold off over the course of the last few days of the week to finish largely unchanged, slightly higher than where they were last week. It's quite start to relatively quiet week today. We've got Swiss retail sales, Euro trade, as I said, and the New York Empire State Manufacturing release. Sorry. Otherwise, it's a fairly quiet start to the week. US CPI Wednesday night is the big one. That's going to be the piece of information that informs us about whether it's a September or a December liftoff for the Fed. Anyway, to the overnight scoreboard, the Dow Jones was up 0.4% to 17,477. The Nasdaq rose 0.29 to 5048. S&P was up 0.39 to 2,091. In London and on the continent, stocks were lower. So the FTSE was down 0.27. Frankfurt was down 0.27 as well to 10,985. I wouldn't be surprised over the next 3 months to see that off 1,000 points, possibly 2,000 points in the DAX. Tokyo's Nikkei was down 0.37%. It finished the week down 0.99%. So it didn't have the best week. Shanghai, it was up on Friday and it's marching to the beat of its own drum. It was up somewhere in the vicinity of 5% for the course of the week. ASX futures, as I said, up 9 points, 5,300. That's not really much of an indication. That's really a flip of a coin or a bob each way. On currency markets, the Aussie currently is sitting at, 73.69. Euros 111 low. Dollar yen 124.20 odd, 124.29, and the CAD's up near 131 at 130.87. Crude oil made a new 6-year low. That's no big deal. It does that every other day now. But it recovered a little bit from that low and closed Friday night at 42.50. Gold failed at resistance last week. It closed the week at 111.14 this morning. It's at 111.13.50. And Dalian iron ore is at 441. Well, that's where it closed Friday. Don't forget, it's denominated in the Chinese currency. So it's going to look a little bit stronger than it otherwise would. Anyway, that's it from me today. Good trading. Have a great Monday, and I'll see you all tomorrow. Bye for now.